So here's a more rare candlestick pattern, but one that is very useful and very accurate as well when we spot them. So to actually display these to you, just as an idea of how rare they are, I've actually had to scale back to November 2016 price action. Now we do have more examples from there, of course, but there are only a couple of examples in this specific market, at least, on the daily chart that have happened since November 2016. So they do happen across all time frames, worth noting now. So you will see these more often than what I'm displaying here. However, the most accurate time frames for these is the 4 hour, the daily, and up. So these patterns are called dark cloud cover and piercing. And what they are is basically a trend reversal that happens after a market gap. So market gaps happen generally over weekends. And what a market gap is we have let's say we have in these examples, show you this one, very textbook dark cloud cover here. We have a bullish candle, okay, and let's say that's a Friday. Now the market closes on Friday, and on Sunday evening it will open up. This is in London time, and it opens higher than the previous closure. Okay, so Friday's candle closes here, Sunday's candle opens up there. Okay, so this candle then pushes down past the 50% mark of this candle, indicating that while we opened higher, the selling pressure is strong enough to actually push us all the way back down past the 50% mark of that bullish candle that we had the week before. So when we see that, that shows us that, yep, the buying pressure was really strong, but the selling pressure is so strong that it wipes out a market gap and 50% or more of the previous day's gains. So that then becomes a really accurate reversal signal that we can then sell into the market from. And that is a great example of dark cloud cover. So as mentioned, it's going to be more rare and it's going to be for the swing traders more so. But when you do see it, it is definitely a great signal to dive right onto. So there's one example of dark cloud cover. We see then bullish, big bullish push, a bullish gap where the market opens higher than it closed the previous week, but then such bearish pressure that we push all of that gap away and close significantly lower than where we were on Friday or the day before. So from there, then the market never surpasses that high again, and it falls all the way down into a huge downtrend. Now, if you view this on the daily chart, the amount of pips that this will give you is insane. Okay, I can't even get that low. Let's have a look how many pips we could have actually caught had you actually sold from this dark cloud cover. So there is an instant 420 pips, a straight month of downside movement without ever returning back to that point after that dark cloud cover formed. So you can see then 400 pips, as an idea of how you could trade this. I mean, if you scaled in, you could probably get yourself a retest entry and, 1 to 10, 1 to 9 risk reward. That means for every $1 that you risk, you're looking to make $9 or more. Now, it's probably not going to be that perfect, but 1 to 6, 1 to 7. There's so much great potential out of these dark cloud cover movements that it's just an unmissable one when it does form. So here's another one. This one is less perfect, but I thought it would be good to mention, good to show, because of course it's good to see ones that aren't entirely perfect, because then not everything you see in the market is going to be perfect. Okay. So this dark cloud cover, you have, of course, the top of the trend is in. We come up to form a lower high. The market gaps up here, pushes all the way back down past the 50% mark. And then after a little bit of consolidation, it really begins to roll over. So while this one wouldn't have been the perfect selling opportunity, if you'd have waited for a retest, you'd have seen, okay, we haven't quite surpassed it. But when you saw that rollover and that closure back beneath the high, just there on this day, this could have provided you then with, okay, maybe it is coming to an end. It looks like the momentum's dead. We did see a big attempt at pushing lower. Now all we've seen is a slight attempt at pushing higher, and we're rolling back over again. Let's sell the market, and bam, you can enter yourselves in with absolute amazing profit potential, 500 plus pips over 20 days. I mean, around 700 pips at the peak of that if you were in for the whole movement. So dark cloud cover is a very powerful tool for your trading toolbox. You just need to learn to read it and just wait patiently. And, don't focus on this as the core of your strategy. But if it does show up, well, then it can be a great opportunity to catch some huge swing moves. So just to recap then, how do we know what a dark cloud cover is? Well, we are looking for a bullish candle succeeded with a bearish candle that opened higher. So we have that little gap and then pushed all the way back down past the 50% mark of the bullish candle. So we have bulls, a bullish gap, and then a big bearish push that closes us past halfway mark of that bullish move. That indicates big selling pressure in the market and is then followed by a big drop in the market price. So there we go. That is dark cloud cover. Now, what is piercing, you might be asking? Piercing is exactly the same thing, but the opposite way. So I've got a few examples of this to show you as well. From my findings, piercing doesn't seem to be as rare as dark cloud cover. Now, I've only traded both of them. I've traded them a fair few times, but not massively compared to some of the other things I trade, because it's just not as common in the markets. And I don't really be trusting this on the lower time frames. It's more of a high time frame thing for me to focus on. So here we have a piercing pattern, bearish candle, gap that opens significantly lower than the bearish candle, which initially looks like a very bearish thing, but then the buying pressure is so strong that we actually close past the 50% mark of that bearish candle. So that then tells us that, okay, the market has built significant strength after gapping down, and it's now ready to actually buy this market higher. So that's exactly what we can do. Just spotted here a nice other example of a dark cloud cover. Once again, not entirely perfect, but after we have bullish candle, bullish gap, followed by a big bearish push, and then this is the highest closure the market manages to do. After attempting higher prices a few times and being rejected, we get a beautiful rollover to the downside. So dark cloud cover, looking for a bullish gap, followed by a big bearish push. Piercing, looking for a big bearish gap, followed by a big bullish push. Great reversal signals. A couple more piercing patterns to show you. This one being the most picture perfect one that I identified on this chart. Bearish, gap, huge bullish push, past the 50% mark, taking us into a just unfathomable bullish movement. Amazing profit potential if you were to catch a reversal out of this candle. Now let's just have a look. 700 plus pips over 3 months. And you would have done that with zero drawdown, absolutely no loss. Okay, enter and bam, off you go. Now within that trend, we also have another opportunity to buy, brought to us by a piercing pattern. So we have bearish candle, gap down, bullish candle pushing us past the 50% mark. That's the lowest point we go to, and the market continues going higher. Okay, I think we have one more example to show for this video. Just want to show you as many as possible. Here we are. Bearish candle, gap down, bullish candle that pushes past the 50% mark of the previous candle, and then bam, off we go into uptrending motion. So there we go. That is the bullish, piercing, and the bearish dark cloud cover patterns. Essentially the same patterns, but flipped. So piercing is bullish, dark cloud cover is bearish, and they're going to provide you with some very accurate entries to swing movements. They are normally before very large upside or downside movements in price. Remember to only use piercing in a uptrending scenario or in an area of trend reversal. Remember only to use the dark cloud cover in an area of trend reversal or a bearish continuation. And remember to only use them on the 4-hour, daily, and up time frames, or at least that's my advice, because I find they are more accurate there than the lower time frames, and the lower time frames can actually leave you burned if you trust the piercings and dark cloud covers on them. So thanks for watching. That is basically the final candlestick pattern that I'm going to be talking about with you. We don't need to talk about, there's probably 30, 40 plus candle patterns out there, but you don't need them. Okay, you only need to master a few, and that's exactly what I've done, and I find great success with these without massive confusion. I don't want to confuse my trading. I don't want to give myself a hard time. These work perfectly for me, and that's how I'm going to keep it. So we've spoken about candle momentum, wicks, indecision candles like dojis and spinning tops, pin bars, engulfing candles, inside bars, and now these two rare but very, very accurate dark cloud cover and piercing patterns. Next video, we're going to run through some examples of using candlesticks as confirmations, and then we're going to conclude this chapter and move into the technical processes, bringing the market flow and candlestick aspects that we've learned so far together to actually find and formulate trading setups. So thanks for watching, and I'll see you in the next video.